Good morning, everybody. Yeah, good morning. I'm up because I thought the market was open. So, since the investment market is not open, I was like, you know what? I'll just go live. I missed the Urban Economic Empowerment Show on Wednesday, so I'll just go live right now. No biggie. Um, that's what happens when you miss your Wednesday. That's what happens when you're not up on holidays and you pop up and you're like, oh, the stock market is not open. Okay. Well, the stock market is not open, but it's okay. You can always trade crypto. It's 24 hours. Bitcoin 24 hours. You can always trade that. So maybe we'll look at some of that trade. Buy the dip, baby. Buy the dip. So let's see. Let's do some learning. Um I'm not Garfield. This is Mo. I'm not Garfield. I didn't like Garfield go to sleep. Nope, we're up. Normally up for the market, but since the market is not up, um, I'll go ahead and do some learning. So I'm on the Stash website. Okay, and this is on Stash is one of the tech websites where you can actually become an investor and you can start from beginning and do some learning. Okay, so let's go here to the learning tab. Let's see what Stash has to talk about today. All right, let's see what we can catch up on. Uh, this tax season, some of you guys haven't filed your taxes yet. So let's see. The last time we talked about financial literacy, since the market not open and looks like the only thing you probably be able to trade today is some crypto. Maybe we'll talk about some types of crypto. Let's do that. Um, let's see. Let me stroll down, see what else they got going on, and I decide. Uh, okay, let's do this. Let's talk about the latest story. Okay, so this story was published April the 8th. The story was published April the 8th by the Stash team and say the types of cryptocurrencies. So the market is not open for equities, but we can trade some crypto. So let's get at it. We ain't gonna miss out on the opportunity. Okay. We're still gonna do some training this morning since I missed Wednesday. Peace, power, and profit to everybody who's up at 4:37 a.m. in the morning. Make sure you go to Monica Lamb's YouTube page and subscribe. Okay. All right. It says you may notice you may have noticed there's a glowing buzz about cryptocurrency. If you're crypto curious, there's a lot of information to wade through. Over the last decades or so, the crypto market has exploded. In 2009, Bitcoin was the sole player, but today there are more than 18,000 types of cryptocurrencies available. Envisioned as digital money not controlled by a government or central bank, cryptocurrency is built to support decentralized peer to peer transactions, processes, and systems. These currencies are created using blockchain technology. You can use cryptocurrency as a source of purchasing power or an investment opportunity. If you're ready to investigate just some of the crypto options available, this guide takes you through altcoin, tokens, the top 10 types of cryptocurrencies in 2022, and everything in between. All right, so let's do it. What are altcoins? What are tokens? Top 10 cryptocurrencies by total market value in 2022. How to invest in cryptocurrency. Yay! So let's learn. It's the weekend. You don't have to miss out on a dollar. Let's see what we can do in the crypto world. What are altcoins? In the early days, Bitcoin was nearly synonymous with cryptocurrency because it was the only coin for many years and established early dominance in the market. Therefore, subsequently, coin based cryptocurrencies were dubbed altcoins. The term altcoins or alternative coins simply refers to any type of coin based cryptocurrency that is not Bitcoin. Like Bitcoin, altcoins function using blockchain technology. Altcoin creators often taunt their cryptocurrency as having qualities Bitcoin does not, such as greater transaction speed and increased security. Bitcoin, which was originally designed to transfer wealth and record those transactions, is somewhat limited when compared with altcoins like Ethereum that support applications and smart contracts. Some altcoins like USD coin are pegged one to one with a fiat currency, which can make them less volatile than Bitcoin. All right, that was altcoin. Moving right along. What are tokens? Tokens are digital assets built on another cryptocurrency blockchain. Generally, it's easier to create a token than it is to create a coin. Coins require a specific underlying blockchain, but tokens can be built on any programmatic blockchain, essentially piggybacking on already developed and validated complex network. All tokens fall into the altcoin category. Since the Bitcoin blockchain does not support token creation, tokens often have broader use cases than coins. For instance, most can be used in financial services on the public blockchain, known as decentralized finance or DeFi. These services include things a traditional bank would usually support, like earning interest, purchasing insurance, borrowing, lending, and more. Non-fungible coins, also known as NFTs, are also gaining popularity as a way to buy and sell digital artwork. There you go. Those are tokens. Let's keep the party rolling. Top 10 cryptocurrencies by total market value in 2022. Market capitalization or market cap is a metric used to measure the relative size of a cryptocurrency. For example, the total value of all coins that have been mined. Market cap is calculated by multiplying the number of coins in the circulation by the current market price of a single coin. You guys really need to pay attention to market cap. Okay, even when you're looking at the equities, you should be paying attention to market cap. All right, so cryptocurrency, the top market value of 2022. So here we go. You got Bitcoin at 730 billion. Ethereum at 327 billion, Tether at 78 billion, Binance Coin at 63 billion, USDC, US dollar coin at 50 billion, and so on and so on. And so here's the chart all the way through. Cardano, 35 billion, Solana, 33.5 billion, XRP, 29 billion, Terra, 21 billion, and Polkadot at 19 billion. This is the top 10 as of 2022. This is the top 10. All right, so let's get in it. Let's talk about them, each one of them, see what they are. Bitcoin was amongst the first cryptocurrencies with specification and proof of concept published in 2009. It continues to dominate about 50% of the crypto market. Bitcoin issuance will halt completely once 21 million Bitcoins are in existence. The number of Bitcoins created each year is automatically halved to maintain a steady and predictable rate. All right, so that's the Bitcoin. Ethereum. Ethereum, the second most popular cryptocurrency after Bitcoin, bills itself as the world's programmable blockchain. In addition to powering Ether, the currency of Ethereum blockchain, it allows people to use other digital assets like Bitcoins and altcoins on the network, as well as store data and run decentralized applications. Tether. Founded in 2014, Tether is the first blockchain-enabled platform to facilitate the use of traditional currencies, a token-based system built on multiple leading blockchains. Tether tokens are referred to as stable coins because they are pegged one-to-one, a fiat currency, which can offer price stability. Tether is pegged to currencies including US dollars, euros, offshore Chinese yuan, and gold. Binance Coin. Initially based on the Ethereum network, Binance Coin is now native to its own Binance blockchain. Binance has initiated a quarterly auto burn program that removes about 50% of Binance Coin's tokens from the circulation as a deflationary measure. Let's keep the party rolling. USDC, US dollar coin. USDC is a stable coin pegged to the US dollar. The system allows traditional currency to be tokenized for use online and across blockchains. USDC can be changed back into traditional US dollars at a one-to-one rate. I didn't know that. Okay. Cardano. Individual units of Cardano cryptocurrency are known as ADA. Cardano tokens can power multiple financial services beyond their use as their use as currency. The total supply is capped at 45 billion tokens. As of February 22, about 33.6 billion tokens were in circulation. Solana. Solana is the name of both the blockchain platform and its native cryptocurrency. Launched in April 2020, Solana promises users faster operations and lower transaction fees than Ethereum. It operates on a proof of stake blockchain that consumes less power than a proof of work blockchain like Bitcoin and is therefore considered more environmentally friendly. All right, we're getting somewhere. XRP. XRP is a digital asset native to the XRP Ledger blockchain designed specifically for payments. XRP can be traded on more than 100 markets and exchanges worldwide. XRP intended to serve as a kind of bridge between hard to match fiat currencies, enabling easier international transactions. Terra. Terra is a stable coin pegged to the US dollar through an algorithm and associate reserve token called Luna. This differs from most stable coins, which are pegged to the conventional currency through cash or cash equivalents. Slightly less decentralized than other networks, new coins are only minted when a percentage of Luna are burned. If you use the coins to buy something, that transactions generates a fee similar to credit card transactions, then similar to a stock dividend. That fee is distributed to people who own Luna tokens. Oh, that's nice. I need to look into that one. Polkadot. Polkadot protocol aims to integrate blockchains by creating a cryptocurrency network that connects them with parachains. The Polkadot token DOT is used both as a governance token and for staking, which is how the network verifies transactions and use new DOT. Why are so many types of cryptocurrency? Why are there so many types of cryptocurrencies? Let's talk about it. A cryptocurrency can be launched by anyone who has an internet connection and either build a blockchain or use one that serves as a platform for the creation of such asset. The popularity of cryptocurrency and the relative ease of creating one has inspired many new varieties that meet different needs. Crypto assets go beyond coins and tokens, and new ones are surfacing daily. New cryptocurrencies may include advanced functionalities their predecessors do not. For example, Ethereum, Solar, and Polkadot, among others, support smart contracts or programs stored on the blockchain that run when predetermined conditions are met. Smart contracts, or if and when then, rules to automate the execution of agreements quickly, predictably, and without intermediary. All right. Again, you're tuning in to Urban Economic Empowerment Show, early morning business strategies. And today we're talking about crypto because the only thing we can trade right now is crypto because the stock market is closed. What cryptocurrency is most widely accepted? Bitcoin is holding steady as the most widely accepted cryptocurrency, but Ethereum and other types of cryptocurrencies are gaining ground. Around 36% of small to medium sized businesses in the United States are accepting Bitcoin payments, as some corporate giants like Amazon, Microsoft, and Starbucks. So, boom, you got companies out there that are actually accepting cryptocurrency as a payment. All right. How to invest in cryptocurrency. In addition to buying cryptocurrency, you can use to make purchases. You can also invest in crypto. Cryptocurrency investment is gaining momentum as a way to participate in developing digital economics and projects. If you're curious about cryptocurrency as an asset class, you may wish to read more detailed explanation of how to invest in cryptocurrency. Like any investment, there are pros and cons, including the risk that you can lose money. All right. So, are you a crypto curious investor? As the crypto boom continues, some investors are eager to stay on top of the trend. With so many types of cryptocurrencies, investors have a lot of options to explore. Be aware that cryptocurrency can be a risky investment. It can be volatile, it's large, unregulated, and there are many unknowns about how it will continue developing. One way to gain exposure to select cryptocurrency with Stash is through the Grayscale Bitcoin Trust and Grayscale Ethereum Trust, which are now companies of Stash Smart Portfolio. Woo woo! So Stash have Bitcoin. All right. I didn't know that. I'm glad I chose to talk about Bitcoin today because now I can add some of this Bitcoin, hopefully, maybe to my retirement portfolio and stash. Huh? Somebody not? Oh, wait a minute. I got the lock. Hold on. Let me mute. Okay. All right. So let's go to TradingView. All right. Good morning, you guys. Thank you for tuning in to the early morning business strategies. I missed Wednesday's show, so I wanted to try to catch up a little bit on some information. Let's see what we got going on here. And I'm going to open up the charts. Let's see. And I'm going to go to, so I'm in Trading View. And as you can see, I have it on all, but I'm going to go to crypto. And so in TradingView, it's a platform we use often to show investments. Um, you can streamline it by, you can do all in search, or you can do just stocks, or you can do futures, you can do forex, you can do crypto, you can do index, you can bond, you can do economy. So today we're talking about crypto. So I'm gonna click on crypto. Okay. Um, and I kind of went through some of the different types of the top 10, not all. I just went through the top 10 crypto. So I'll just do the one that's most popular to most, and that is the Bitcoin. Okay. Okay. Let's bring up the charts. Let's see what's going on. As you can see, Bitcoin, it goes 24 hours. You could trade Bitcoin in Robinhood. You could trade it in Webull. All right. I have up my chart right here. Let me see. Let me see if I can change the appearance of my chart. All right, so I'm in Trading View, and it kind of depends on what you like in reference to background. So I have it on a white background, but I'm going to change it to a black background. So I'm going to go here to the tool. I'm going to click the toolbox, and I'm going to go to appearance, and I'm going to change it from solid, and I'm going to change it to black. And then I'm going to go to the text, and I'm going to change the text to white. All right. So hopefully you all have a better view. And I'm going to click OK. So hopefully now you have a better view of it. Now, I like to use indicators. Let me just kind of familiarize yourself with Trading View. You will see African Emporium. He uses the Trading View screen a lot. This is kind of where we go to kind of watch our trades. Um, I'm going to uh, just share a little bit of what I know. Again, you tune into the early morning business strategies. This is, I'm not a financial advisor. I'm just sharing information, sharing my experience. Trade at your own, use your own precautions. It is a choice. I'm not forcing it on you. I'm just sharing information, and hopefully that it kind of piques your interest, and you begin to become an investor and grow your money. That's it. That's all I'm doing. All right. Now that I got that out of the way, okay. As you can see, the Bitcoin trades, it pays trades 24 hours. So right now, in the top right corner of this screen is where your ticker is, and you could change it, whenever you like. But I'm gonna use Bitcoin. Next, right here, this is the time frame area. Okay, so you could put this chart anywhere from 1 second to 30 seconds. You can use minutes, you can use those charts, you can use hours, you can use days, or you can use a range. Okay, so right now, um, I like to look at the hour chart, so I'm gonna put it on the hour. All right. Then next to that, you have the way you would like to view your chart, right? Your technical. So you could use the bar lines. So this is the bar. So sometimes you may go through YouTube and you'll see a YouTuber speaking on investments, and they'll have a chart and it'll kind of look like this. Or you could change it, put it on the candlesticks, right? You can you'll see some charts look like this, or you can use the hollow look, right? If you don't like the solid, you can use the hollow look. Looks like that. You can use the line. Okay, that's another view, right? You can use the line. Some people favor the line over the candlestick. Some people favor the bars. over the line. You can use the area shading, okay? You could do the whole baseline deal, green up, red is down. All right. And so on and so on and so on and so on. I'm going to stick to the candlesticks because that's what I know. I'll stick to something I know. All right. Next to that, you have indicators. There are different indicators you could use. I have a list of favorites. I'm going to add to my favorites. I'm learning how to use the MACD. All right. If you want to know, and I'll put it on my favorites. So now I have the MACD on my favorites. If you want to know what all of these mean, how their uses, you can go to what we call Investopedia. This is our go-to source when we're doing investments, right? And you can put in indicators and boom, you would get everything about indicators, trading strategies, okay? And so you can educate yourself there. All right. So all of these, if you have never heard of them before and you want to get more understanding of them, you could go to Investopedia. And maybe if I don't take too long on this video, I might actually just go through a few of them. Okay. All right. So I put up the MACD and I'm gonna put up one moving average. I'm gonna put up the 200. The volume. Let's go. So I'm gonna click right here, and I'm gonna click the tool on the moving average, and I'm gonna change it to 200. I want the 200-day moving average, and I'm gonna change the line to a different color so I can see it. So I'll make it purple. I'll make it a little thick so I can see it like that, and I'll hit OK. All right, so that's my 200-day moving average. All right, this information down here is the volume, and this information down here is the MACD. All right, now I'm going to change my MACD. This is what Sunny taught me on the MACD. I'll change my MACD to 13. It works for me. It worked for me so far. And 48. See, Sunny, I'm learning. And I'm going to change my colors so I can see them. So I'll change this one to gold and the red. I like that better. And I'll hit OK. All right. So I'm also going to put up on my indicators, I'm going to put up the RSI. That's Thunder Baby right here. All right. Let me see if I could do the RSI. I'll leave it like that. So this is the RSI on the bottom. Let me bring these down a little bit. I'm not going to talk about those. I'm just showing you how I set up my chart. Okay, let me bring this down. All right, so those are the three. Those are the, oh, and I have one more. So I have 4 indicators up. I have the moving average, which is long purple line. I have the volume, which is these up and down little bars. Then I have the MACD, and then I have the RSI. So those are indicators. If you move over to the right, you could actually do a template. You can actually save it, right? So you can say, so I can save this template and I can name it. I'll name it since I have let's see what I want to name it. I'll name it I'll name it MACD dash RSI because that's what I'm gonna be looking at. All right. Oh, I messed up something. Okay, I think I named it. All right. Now that I've named it, I can also, okay. I think I named it. All right. So you can also on TradingView, you could set alerts, right? So if I'm waiting for a specific price action, I could do it once. I could do it every time. If I'm wanting to alert a particular value, I would actually put it here. I could change this and I could set the alert and it'll notify me, right? Or it could send an email. It can notify me on the app, right? Or you could put the date you want it to expire. So if you want it for one day, you do it one time. If you want it every day, then boom, you click every day and set it. Okay. Um, so you can either you want it to when it crawls, when it goes more than, and so on. So you kind of play with this at your leisure to set alerts. All right. And then the replay, you can actually back test. You can actually back test. So it's going a little slow speed, right? You could back test. So let's say I wanted to start it right here. It say click to select. Let's say boom, right there. And it'll start back testing this information. But I have enough indicators on, so we're gonna turn it off right now. We're not gonna back test right now. That's when you want to try to plan your trades, look and see how the market actually moves, what it's doing, that kind of thing. All right. Let me close this in a little bit so we can look at more time period. All right. So I just kind of closed it in. All right. All right. So that's the top. So here, right up underneath it, you got um what you're looking at, which is the Bitcoin US dollar. I have it on the 1 hour. This is the Coinbase feature of the Trading View, right? Coinbase, you can get that app, that actual app. Okay. Now the O is the open. So this is the price Bitcoin open at. This is the high. This is the highest it got for the day. This is the low, the L, and this is the close price. And this is the percentage or dollar amount of either profit or loss. And this is the percentage of it at the top of the screen. All right. Let's keep the party going. Good morning. Peace and power profit to everybody tuned in out there in social media world. The market's not open. I'm usually up looking at the market at this time. I didn't want to waste any time, so I figured I'd go live. And there it is. Again, I'm not a financial advisor. I'm surely just sharing information with you all, sharing my experience in hopes that it 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 motivates you to do and invest. Okay. All right. So this is the price where it is right now. Okay. This is the volume. This is the moving average. These are the candles on the screen. Let me open this up a little bit out so you guys can see the candles better. Bring it down, bring it down, bring it down. Just a little bit, little bit, little bit. Squeeze this in like that. All right, cool. Okay, I'll make those candles big on a different time frame so you guys can see it. This is the volume on the here, and this is the MACD, and this is the RSI. All right. On the right side is the actual price, right? And so you can see the price action. Right now, Bitcoin is trading underneath the 200-day moving average. As African Important may say, moving average acts like a magnet, and so is a possibility it could pull back to that price, right? So we would say buy the dip. People say buy the dip. That's what they mean. When that price drops, you could buy here as an entry if you decide, and come up with a location that you want to sell. All right, and so you could plot your point, your resistance, and your support. So that would be the next thing that you would actually do. And you have to decide, on the chart where you want to plot your resistance and your support. Okay, so I have it on the 1 hour chart. So I usually trade on the 1 hour. I'm gonna maximize this a little bit more so I can see the candles. Do it like that. Just kind of spread it out. So if I'm gonna plot some resistance. Like I said, I'm on a 1 hour. You can move the screen to the left and go as far left as you would like to plot resistance. It's a choice. So what I'm gonna do is I'm gonna put it on the bottom here. You have daily, 5 day, 1 month, 3 months, 6 months, year to date, 1 year, 5 year, and all. I'm gonna put it on the year to date right here. And then let me scrunch this in so I can see the chart, and I'll plot my support and resistance. I'm gonna apply it based on the year to date. How about that? All right. And so usually when I do it, I look for the price action where it's actually hit the most. I use the area where the price action touch the candles touch the most, right? So let's see. I'll bring it in a little bit more just to see some more of this chart. So we know Bitcoin went pretty high up there. So I think this was the highest it actually went here. When it I think that was in November 21 when it just went wow, way up there. Okay, so let's see. I'm going to let's see. I'll plot. Good morning. I'll go ahead and I'll plot it right now. All right. And you could choose where you want to plot your support and resistance. This is just where I'm going to plot mine. All right. So I'll use, I think this right here. This is the highest it gone, but I'll plot it right there. Yep, that resistance. So I'll go here to the left. These are some tools that you can use to mark up your skills. So I'll go here under this one and I'll choose horizontal and I'll put it right there. Bam. That would be my resistance, and my support. I would put it where this price rejected right here. Right there. Oh, I gotta go get the line. Get another horizontal line, and I'll put it right there. So let me kind of load this in a little bit. I can bring this down some. So I kind of did in so I can see some more. So I'll bring it down to here. Yes, bam. There it is. Okay. Okay. All right. So now, all right. So this would be, I'm going to change this color of the line. Change it to this color. And I'm going to write on the chart. Let me see if I can write on the chart. Oh, Lord. What I done? Let me see if I can write on the chart. Try to do like AE and write on the chart. All right. So this one, this is my support. Okay. Yay, I'm doing it, you guys, just so you guys can know what I'm doing. All right. It takes time, guys. This is definitely not a marathon. As you can see, it took me a whole 30 minutes and I'm just explaining the chart. So this line right here. Oh, messed up. Oh, that's how that works. Okay. All right, let me get this stuff off the leg there. That's how that works. Move this right here out of the way since I didn't learn how to type the word. All right. Okay, let me close this out. All right, so this is my support. me change that. This line is my support. This is my resistance. Boom. So, okay, so let's go to, because I know you're first like, what is support and resistance? All right, so let's go here. Always go to your source, right, which is Investopedia. Hit submit, and it will tell you, boom, resistance level, definition and examples. So let's look it up. So resistance definition, it says resistance or a resistance level is a price at which the price of an asset meets pressure on its way up by the emergency of a growing number of sellers who wish to sell at that price. Resistance levels can be short lived if new information comes to light that changes the overall market's attitude towards the asset, or they can be long lasting. In terms of technical analysis, the simple resistance level can be charted by drawing a line along the highest highs for the time period being considered. Resistance can be contrast with support. All right. Depending on the price action, this line can be flat or slanted. There are There are, however, more advanced ways to identify resistance, incorporated bands, trend lines, and moving averages. All right, so I have two, two of those on the screen, and I'll show you in a second. A resistance level represents a price point that an asset has had trouble exceeding in the time period being considered. Resistance can visualize using different technical indicators rather than simply drawing a line connecting highs. Applying trend lines to a chart can provide more dynamic view of resistance. All right, let me scroll down. I don't think I could play that video on Garfish channel, so I won't. Um, let's talk about it. What do resistance levels tell you? Resistance levels, I'll stop. Resistance levels and support levels are two of the most important concepts in technical analysis of stock price. Technical analysis is a method of analyzing stocks that assumes the vast majority of available information about a stock, bond, commodity, or currency is the most instantaneously incorporated in the price by the market forces. Therefore, according to this theory, it isn't profitable to make investment decisions based on this information. Instead, technical traders try to divine how stocks will move on a short-term basis by looking at the behavior of the markets in similar past situations. All right, that's this comment. Hold on. Excuse me. This comment is in reference to when you hear people like Brother African Emporium, Chris, Andre, many others say, look to the right. I mean, look to the left when you're trading. Basically, you go back this way to see how the market reacted, right? So that's what it means by that's what it means by looking at past situations, looking at behaviors of the market in past and similar situation. You can look at it from a technical perspective. You can go to the fundamentals. You can go to the news, right? So you have to use all that. You have to take all of that into consideration. All right. So let me go back up because I talked about resistance. Now let's go to support, and I'll just click the hyperlink here. Okay, so let's talk about the support so you can understand that part. What is a support? Support or a level refers to the price level that an asset does not fall below for a period of time. An asset support level is created by buyers entering the market whenever the asset dips to a low or price. In technical analysis, the simple support level can be charted by drawing a line along the lowest levels for the time period being considered. The support line can be flat or slanted up or down with the overall price trend. Other technical indicators and chart need to identify advanced versions of support. So here's some takeaways. Support level represents a price point. Oh Lord. A price point that an asset struggles to fall below or over a given period. Support levels can be visualized using different technical indicators or simply by drawing a line connecting the lowest lows for the period. Applying trend lines or incorporating moving averages provides more dynamic of support. All right, boom. So that's what I mean by support and resistance. And I'll throw out trend averages and I'll back to the chart. Make sure you hit that like button, you subscribe. Make sure you say hi if you're viewing. Peace and love to those who join in so far. Pan Africanism strikes back. You got peace and love. I know you Garfield was live, but it's not Garfield. It's just Mo. Sorry, didn't want to trick anybody. Let's see who's on my channel. Hey, shout out to my name is Tika. How you doing this morning, Torin Williams? Peace and love and chaos reign. Hey, peace. Let me see if anybody is tuned in on Facebook. Let me shout out the folks out there on in the Facebook world. So nobody's tuning in the Facebook. Okay, cool. All right, so let's keep the party rolling, guys. I hope you guys are gaining some info, some insight, and let's go. All right. So trend lines. Let's move this up. What is a trend line? Trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data best fit. The resulting line is then used to give the trader a good idea of the direction in which the investment's value might move. A trend line is a line drawn over pivotal highs or under pivotal lows to show the prevailing direction of price. Trend lines are visual representation of support and resistance in any time frame. They show direction and speed of price and also describe patterns during periods of price contraction. Takeaways. Trend lines indicate the best fit of some data using a single line or curve. Number two, a single trend line can be applied to a chart, giving a clear picture of the trend. Number three, trend lines can be applied to highs and the lows to create a channel. And number four, the time period being analyzed and the exact points used to create trend line vary from trader to trader. That is true. All right, and last but not least, moving averages. Because that's the support and resistance that I want to talk about in a second when I go back to the chart. Moving average. What is a moving average? In statistics, a moving average is a circulation used to analyze data points by creating a series of averages of different subsets of the full data set. In finance, a moving average is a stock indicator that is commonly used in technical analysis. The reason for circulating the moving average of a stock is to help smooth out the price data by creating a constantly updated average price. By calculating the moving average, the impacts of random short-term fluctuations on price of a stock over specific time frame are mitigated. So some takeaways. A moving average is a stock indicator that is commonly used in technical analysis. The reason for calculating the moving average of a stock is to help smooth out the price data over a specific period of time by creating a constantly updated average price. Number three, a simple moving average over a stock it is more. Okay, let's go back to the chart. So I have a resistance line. You see me, I have a resistance line here. We talked about resistance. I have support, and that purple line is my 200-day moving average. All right. So all of these, so this 200-day moving average can act as a report of our resistance. So in reference to where the stock price is right now, let me make this a little larger, right? The stock, let me move this on, let me move my little thingy down here so you can see it. Let me move my words because I want to move my chart. I want to maximize my chart so you can see something. So right now, the price is trading under the 200-day moving average. So in this case, my 200-day moving average can be my resistance to this support. To this support. So my 200, this could be a resistance for me. Okay. So you see how it tested that 200-day moving average here and it pulled back. So this could be an entry point for you, or you can play into that. It's a choice, right? So that's the 200-day. That's using the moving average as a resistance. Okay. Now let me move back to the left. Now here, right? When price action was up here, that I could use the 200-day moving average as a support. So when it's above, when price action is below, when price action is below the moving average, my moving average can be a resistance. And when price action is above the moving average, my moving average can be support. See how that works out? All right, go Mo, go Mo. I've learned a lot. Okay. So you see my chart changed on the daily. When I went to the year to date, it went to the daily. So let's see if, let me move this over so I can see. Let's see if my hold on you guys. Let me make sure my AirPods are plugged. Let's see if when I change my time frame, because remember I said we could change the time frame. So I'm on a daily right now, right? That means each of these candlesticks represent one day. All right. It means each candlestick represent one day. I'm going to change it to the hourly. Well, let's go 4 hours. Now, each of the candlesticks still it represents 1 hour. And see, price action is still below the 200-day moving average in the 4 hour. Let's change it to the 1 hour. Okay, same thing. Price action is still below 200. And I go to the 15-minute chart, a little closer, right? And then I go to the 1-minute chart. Price action is right at the average. So that's how you can kind of go through your chart if you want to test the time frames when you're making a decision. All right, we're not making decisions right now. I'm just showing you how to set up the chart, kind of read the screen a little bit. So when you see us doing all of these things, you can know. I'm gonna take off. Let's take off. I just put these up to just show you some of the trading indicators that I use. If you want to watch other videos, educate yourself more on those, you can. Um, and I'll leave up just the moving average and I'll take off the volume. So boom, now there you go. You got my support, which is this line. I got my resistance. The orange line is my support, and the gray line is my resistance. And I got the 200-day moving average. So let me type that on there. Here, 200 MA. Okay, and boom, that's this purple line right here. All right. And you can review, go back. We're talking about cryptocurrency. The exchange is not open, but as you can see, Bitcoin trades 24 hours. You can see over here on the left side of the screen, the number is going up, right? Now, let's talk about, I'm going to do one more thing, and see if I could close out these last 30 minutes. Let's talk about these candlesticks, okay? Let's talk about these candlesticks. I'm going to go to, you can go to Investopedia, right? And you could put in candlestick patterns, right? And you could get information and you can get examples and you can get videos, right? On different candlesticks. Let's go back up. I want just candlesticks. Let's do just candlesticks. All right, here we go. And it could tell you all about these different candlesticks. So, but I'm gonna go to Google because I just want to show you some quick ways to look for. Let's do candlestick patterns. All right, so you have. You know what? Let me go back here. I didn't want to go there. Hold on. Let's do candlesticks. All right. Let's do candlesticks. All right, understand the candlesticks because you want to know, because you're going to use the candlesticks, you need to know what they actually mean, okay? Candlesticks, the lightweight, the logic trading. All right, so let's go down. Okay. In understanding basic candlestick charts, we look at the history and the basic of the art of Japanese candlestick charting. Here, we look deep into how to analyze candlestick patterns, so the principles behind the art. Before learning how to analyze candlestick charts, we need to understand that candlestick patterns, for all intents and purposes, are merely traders' reactions to the market at any given time. The fact that human beings often react in mass to situations allow candlestick chart analysis to work. Okay, so candlesticks is just the behavior of how investors react to the market. Okay, many investors who rush into dot-com bubble had before time never bought a single share in a public company. The volumes at the top were record breaking, and smart money was starting to lead the stock market. Hundreds of thousands of new investors armed with computers and new online trading accounts were sitting at their desk buying and selling .com favor of moment of the moment. Hold on. Like lemmings, these new players I took greed to a level never seen before, and before long, they saw the market crash around their feet. All right. So this is a chart. This is an example. I just want to show you. Hold on. Let's just go. I want to show you the candlestick. I don't want to do that. I think I've gotten too far over my head. I don't want to do that part right there first. It's not where I wanted to go. So let's go here. Let's see. I want to do. All right, yeah, this is what I want. All right, candlestick charts are a technical tool that packs data for multiple time frames into single price bars. The market, this makes them more useful than traditional open high, low close bars, or simple lines that connects dots of closing price. Candlesticks build patterns that predict price direction once complete. Proper color coding adds depth to this colorful technical tool, which dates back to 18th century Japanese traders. All right. Stephen Nielsen brought candlestick patterns to the Western world in his popular 1991 book, Japanese Candlestick Charting Techniques. Many traders can now identify dozens of information of these formations, which have colorful names like bearish dark cloud cover, evening stars, and three black cows. In addition, single bar patterns, including the doji and hammer, have been incorporated in dozens of long and short term trading strategies. Candlestick patterns, which are technical trading tools, have been used for centuries to predict price direction. There are various candlestick patterns used to determine price direction and more momentum, including three line strikes, two black gapping, three black crows, evening stars, and abandoned baby. However, it's worth noting that many signals emitted by these candle patterns may not work reliably in modern electronic environments. All right, so boom, let's go. Woo, woo, woo. I want to show you. Let's see if they show the actual stick. Oh, that's not what I want. I just want. Okay, so they're showing the different patterns, but that's not what I want to show you first. So let me scroll down. All right, I'll find it on Google. Don't you worry. Let me go here. Let's see. Yeah. So if you go to Google and put in candlestick cheat sheet, boom, you get this. I want to show you um, just the candlestick. Look at this one. There's so many. There's so many. I like it when it has the bearish and the bullish side by side. It makes it easier for me. So let's go back. Let's find. I want to. Oh man, I need to find this before I get off. Let's see. Let's go back up. Good morning, y'all. I just want that candlestick by itself. Candlestick. Let's do it like this. Yep, this is what I want to show, but I want to show it in color. Show it in color. Oh, here it is. Bam. This is what I'm looking for. All right. Oh man. Okay, here we go. So this is what I wanted to show you guys in color. All right. And this is the last thing I'll show. So this is a candlestick. It says a candle for a particular time period is built using 4 prices: open, high, low, and close. If close is higher than open, it is in a bullish candle green. If close is lower than open, then the candle is bearish and it's in red. Okay. So the green candles, most likely, a lot of times you'll see the green and the red. Okay. But you could change your candle colors to whatever color you like. All right. So the green, the open, you see right here at the bottom of this box, that's the open. This stem here is the low. Stem going up is the high. All right. And then at the top of the box is the close. It makes sense. The red candle, the open is the top of the box. The close is the bottom of the box. The stem is low and then the high. So you have to remember this. So when you're looking at the screen, right, you see the green and the red, you'll know, you will know what we mean, right? When you're seeing on the green, where's the open and the close, and on the red, it's just the opposite. And that's what that means. And like I said, this is the daily chart. So each candle represents one day. All right. I hope you all enjoy this informational learning session. This is definitely noteworthy to go back and review. Again, this is just clearly information, not a financial advisor. Make sure you do your due diligence, do your own research, right? But since the equity market, the stock market is not open on today, I didn't want you to think that you could not trade. You have the opportunity to trade cryptocurrency and still make some money. Okay. One more thing. Let's go back to the candlestick patterns. This one right here, this is a good one. I don't know if you can take a picture, screenshot it. Let me see if I can make it larger. Let's see. Let me make it larger. All right. This one, this particular chart. See, I like it when it's like this. You got the bulls and you got the bears. The bulls represents uptrends, the bears represents downtrends. So it have the bullish candlesticks over here, and you could print this off, put it up somewhere. So when you're looking at the charts, you could take a quick look and look at those chart patterns, and you could tell if it's going in a bullish or a bearish, right? Like these indicators are here for you to make a good trading decision. So if I was you, I would definitely make sure I look up these candlesticks. All right. So again, you all, I use my stash information to educate you. So this was the source that I use. And we were talking about Bitcoin. Cryptocurrency, right? The types of cryptocurrency. Why? Because the market is closed today. It's a holiday, but you still have the opportunity to test your skills. And then we use TradingView app, right? I kind of explained to you how to set up your TradingView app, right? Gave you some indicators, isolators that I actually use just to kind of give you an overview of it. We used Investopedia, right, as a go-to for definitions. Okay. We use Google to look up some stock patterns. All right. So I'm glad you guys tuned in. Y'all go on and have y'all a great holiday weekend with your family. Educate someone else. So guess what? You can write off your trip. It's business, baby. If you have not already done so already, and you don't have a home-based business, and they're eating you up in taxes, and you're looking for something smooth and easy you can talk about all the time, listen, join my team. Join my team, my econ. I'm educating you. If I was traveling this weekend, baby, I would definitely have a crowd of people around me and I would be talking about business and I would definitely have written off that mileage if I drove. Okay, so it's simple. You can go to molam.myecon.net and you can sign up today. Okay, let's see what's the going rate right now. And don't worry about it. You write the subscription off on your taxes. Whoop whoop. Preaching better than you clapping, but it's all good. All right. So you can sign up today for $19.95. And then after that, it's $39.95 a month, all of which is tax deductible. But look at all this great information you get. You get to learn how to income shift, right? First strategy, you learn the tax strategy. You have a credit system. We have all the little sample letters in there for you to build your credit. We got the cash flow manager app and tax record keeping app. Everybody needs a good little economist system. We got the debt eliminator software. We got investment education training. Heck, I'm giving you that right now, right? So go ahead. Let's get it, baby. All right, you guys. Hope you have a great weekend. Quick little early morning business strategies because I miss Wednesday's Urban Economic Empowerment Show, but I didn't want the week to go out. I wanted to make sure as you got fired up of coming off of seeing us make some dollars on yesterday, that you figure out have an opportunity. Now, don't forget, paper trade, paper trade, paper trade until you get it all together. Okay. Peace, power, and profit, and you guys enjoy.